Okay, here we go. Merry Christmas, everybody. Back with another video this week. I want to tackle why Gen Z can't afford to wait for a market crash. I've been talking to some friends that are home for the holidays, and they're saying they're not investing right now. They're sitting in cash because markets are at all-time highs. They want a better entry point. PE ratios and tech stocks are too high, stuff like that. So we're going to cover it all. Okay, to start it off, this is the state of Gen Z in general, just to get a picture of where things are at. So across Canada, Gen Z is dealing with 10-year high unemployment rates, rent eating 30 to 50% of income, depending on where you're living, tax rates for even what would be considered lower income at 30 to 40%, and then currency basement, the hidden tax rate of 7% a year. If you're not making 7% a year, you're falling behind. And then this was another tweet going viral a couple of days ago. The younger generation are so disappointed and frustrated by the state of the housing market. They are spending more of their earnings than they are saving. They're working less, and they're making riskier investments. And I think you see everyone looking for, playing the options markets, gambling, just sports gambling, prediction markets. You see this kind of across the board. And then this is wordy, but this sums up, I think, the whole picture of everything going on nicely and why I don't think we should be sitting in cash. People aged 16 to 28 are not imagining that they are falling behind economically. Median income statistics miss the point. You do not build a life by spending 100% of your paycheck on consumer goods. You build it by owning assets, taking risks, and starting things. That option is disappearing. Without a financial buffer, risk-taking collapses. When risk-taking collapses, mobility collapses with it. Now add AI. It's already hollowing out entry-level jobs, the very roles Gen Z depend on. And this is true just seeing friends that have been graduating this last year, how difficult it is for them finding jobs. Stronger graduates from good schools with internships remain unemployed for over a year. This is not laziness. This is a structural squeeze. We are engineering a generation that is poorer, more cautious, and locked out before they even get started. And yeah, again, I don't think it's all doomsday for Gen Z. I think there's big opportunity for Gen Z. It's just important to understand and see what's causing this economic situation our generation is facing. This was a headline from an article, I think a year ago, but it was going around on Twitter again the other day. Gen Z are having their work ethic questioned. Most boomers don't even know what it looks like to work 40 hours a week and still not be able to afford a house. This goes back to the tension between the boomers and the Gen Z kind of generations, the generational war and tension. I made a video about that actually a couple of weeks ago. That's on the channel. And then back to just gambling. This was interesting. This was from the Wall Street Journal. Crypto, prediction markets, and online betting have rapidly expanded among younger adults because they offer immediacy and the possibility of outsized gains. And I think that's what's been so good. I think many people my age are maybe losing hope. The difference between incomes and assets, there's such a wide gap between housing prices and how many years you're going to have to work to afford a home that people are looking to place bets on anything they can to achieve outsized gains, and make it feel like they'll have a better opportunity to get a house or buy assets, just because asset prices and incomes are so out of whack right now for the younger generation. So it's no surprise, really, Gen Z drove much of this growth in online sports betting in 2025, it says there. And then this is back to the generational tension. So this video was from earlier this week or late last week. Trump was saying that the boomers, house prices have increased. The boomers need the equity in their homes to retire. But it's a problem because house prices have got so high, it's unaffordable for the younger generation. So again, I think this is back to just the tension between the two generations. One generation, it was a lot easier to afford a home. Now it's a lot more difficult. And I think politically, I think the money system's completely broken, and there's nothing politicians like Donald Trump can do to influence house prices on the downside, at least, because they're addicted to printing money, which drives home prices higher. But until the boomers kind of die off, I don't think there'll be any politicians running on lower house prices because they need that older voting base for now, at least. We'll see how that changes going forward. And then this just sums it up, I think, exactly what we're talking about. You could see in the 1970s, the house price to income ratio was a lot closer, and now it's gone completely out of whack. This is specifically Toronto home prices and Canadian incomes, so it's not the perfect picture, but it gives a good idea of what's happening. And then the chart looks like this for all Western countries, really across the world: US, Australia, pretty much everywhere. And again, the money system's broken, and this is why incomes and assets don't match, and it's so out of whack. And you can't even blame people, in my opinion, for having to purchase things like a real estate to store value, because they can't hold cash or they can't hold US debt because the value of those dollars are declining. They're forced to put the money that they've worked hard for in assets that'll keep the money. If you do that in cash, you lose 7-8% a year just sitting in cash. So this is what's happened. This is from a book, The Treasury of Michael Saylor. This was a screenshot on Twitter. I know wealthy people who own 16 estates on the East Coast, but only live in 2. Why did they buy them? Because they make a lot of money and need somewhere to park it. Again, they can't park it in cash because cash loses value. If the wealthy weren't using homes to store capital, they'd cost half as much. The sad part is they don't even want the house. Who wants to be a landlord? They just want a vehicle for long-term wealth preservation. That's how the economy gets distorted, by the perverse incentives stemming from imperfect capital. So the money system is completely broken. The US has too much debt. No one can hold dollars because you're losing purchasing power. And all these second-order effects are coming from that, like people having to buy, 17 rental properties to store the money that they've worked for. They can't hold it in cash or treasuries. And then this was going around earlier this week. Unable to afford homes, younger people are turning to risky investments and reckless spending in desperation and despair. And I saw another tweet. It was a poll. I don't know how accurate these polls are, but it was saying Gen Z isn't even saving because they don't see a point of it. They don't have any hope. Okay. And then this is from another tweet. This is not kids are gambling on things like, gambling or options trading or doing whatever they can to hit like a 10x. This is belief in the future is collapsing. When people lose belief in the future, they stop investing in it. And I think that is what's happening. Okay. This is a tweet from Raoul Pal. He's a great macro analyst. Here he's talking about PE ratios because a lot of people will say to me, PE ratios are so out of whack, they're way too high. It doesn't make sense to invest in tech stocks. And this is Raoul saying there is no tech stock bubble. This is just a chart of PE ratios over the years, but this is where it gets good. So he's saying PE ratios are not in a bubble. It doesn't take into account the fact that during debasement, so government printing, the P, the price of the stock rises more than E, the earnings of the company, because the price of the stock rises similar to debasement, so money printing, it goes up like real estate, while the E is anchored by GDP growth, so it'll go similar to incomes, and that's why the P keeps going higher, and the E, geez, a lot of letters, this is confusing. The E lags. So I guess the whole summary is that the currency is being debased, and that's why PE ratios are going higher, and it doesn't always have to do with the companies themselves, and it shouldn't be the only metric when looking at stocks. And then this is from a Substack I wrote maybe a couple of weeks ago now. Governments can't afford a market crash. If stocks drop 50% and stay there, tax revenues evaporate. Layoffs happen, leading to higher unemployment and lower capital gains intake. Remember, governments are broke. They need as much money as they can get. They're incentivized to juice the market and have it go up, so they get paid more money in taxes. They need asset prices to stay high. Just look at the U.S. yearly deficit. In 2024, they were negative, almost $2 trillion. This is showing that now. And that's why they need that money coming in, because they're running a $2 trillion deficit or $1.8 trillion deficit. And again, this just goes back to me talking about how the money's broken. Like, we can't hold dollars because the government is printing so much money to pay for the interest on their own debt. They're printing money and cash dollars lose value. And because of that, you're having things like gold, a rock from the ground outperforming the S&P 500 because it's hard money, and it can't be printed like our dollars. Okay, now this is the hardest part of investing for me, at least. It can be hard to have conviction and go in with size in a position and hold on to it during all the ups and downs, especially now on TikTok and Twitter. You're just looking for constant stim and someone saying, make this trade, do this, do that. You're getting constant, news updates, either good or bad, on whatever you're investing in. So I think it's been good over the last couple of years that I've been able to just make a position in one thing and let it ride. But it's been difficult to do so. Sometimes I'm like, I want to do this, I want to do that. But at least in my opinion, it seems like if I have strong conviction in something, like I do with something like Bitcoin, and let it ride, it's done well. And then this is just to get a big picture of the S&P. So every dip you can see it's ended up making new all-time highs. Bitcoin isn't at an all-time high right now, but you can see every dip's been a good buying opportunity in the past. And I think, again, it is right now. But again, now it's down 30% from the highs. Some people don't want to be buying during this dip, but if it's back up to the all-time high in 3 months, people will want to be buying there. So it's just a psychological game, and it's hard to overcome unless you have a strong thesis and conviction in what you're doing. And then this is Bitcoin. You have to be in it to win it. So from 2017 to 2024, Bitcoin delivered, almost 900% returns for people holding Bitcoin. You miss the 10 best days, that turns into negative 23% holding Bitcoin. So this is why I don't trade. This is why I hold Bitcoin, and I don't do anything with it, because if I miss the 10 best days, that's a problem. I want those 900% returns, not those negative 20% returns. And everyone wants quick returns, including me. But from the past 5 years of investing, it looks like just going in with conviction on my biggest bet and letting it ride has paid off greatly. And that's what I'm going to continue to do. And I just try to stay out of the noise on anything on Twitter and TikTok and stuff like that. Holding dollars is a losing game. Whatever you're going to be buying, don't hold cash. The gap between asset owners and income earners is only expanding because of money printing. And Gen Z, our generation, needs assets to get ahead and protect ourselves from, our incomes and our dollars that are losing value over time. So holding dollars is a losing game. Invest in whatever you think is a good idea, but just don't hold cash. We need investments to stay ahead. The money system is broken. But if you understand this, I think we can get ahead. Okay, see ya.